the price chart. As you can see, the price never moves in straight lines. There are a series of highs and lows. The general direction of the price movement is called trend. There are three types of trends: uptrend or the bullish trend, downtrend or the bearish trend, and the sideways trend, which is also called flat or horizontal. It's important to determine direction of a trend because trading in the direction of the trend, buying during the uptrend and selling during the downtrend is less risky and more profitable. As traders say, the trend is your friend. It's common practice to draw trend lines. Resistance line is drawn through the price highs and limits the upside. Support line is drawn through the price lows and limits the downside. The continuation of these lines to the right, beyond the point occupied by the price, allows to determine the future zones where the price may stall and change its direction. Resistance and support can also be represented by horizontal lines. These lines are usually drawn through the previous highs and lows or determined using another techniques. The price is more likely reverse down at resistance level, though a break above it opens the way up for further price growth until another resistance level. Same as with support. The price is more likely to bounce up from support level rather than break below it. However, once the price has passed this level, it will likely continue dropping until it hits another support level.
Stay tuned for other titles in this series. They're on the way.